Good morning, traders. Welcome to Beyond Profile. Today is Monday, April 11th, options expiration week, and we've got a government that is still running. No shutdown over the weekend. Come to some sort of short-term resolution. They'll be voting on it later this week. Friday's trading action didn't par out the way that we thought it was. It was almost the market was sort of giving the government a heads up as to see if you don't resolve something, we're going to give you a little discipline. And we saw the markets trade down almost into the gap fill area here. It was 17 and some change. Well, actually, it was a little bit before that, 19. Gap fill, though, technical on that would be down to 16 and a quarter. Didn't get the breakout on Friday, and this morning we're gapping up actually a little bit higher, but we're giving back most of the gap right now. As we get close to the open, you can see where we closed on Friday. We're going to be really close to settlement here. So we may be in store for this gap fill before going higher here. From a technical standpoint, we're still auctioning though in a very tight range. Look at how many days here now. This is what, 6, 7. We can include this too, because actually I can take this box right here and we can go a little bit larger area like that. And we can see that we have an area of acceptance of value back and forth within that range. So we're auctioning within a range here of unfair lows and unfair highs. And we know that this will eventually lead to some sort of strong imbalance move up and out or down below us. And right now, the way that we're auctioning here, we may come back and retest this. They're not holding on to the gap open. We're up only a quarter right now as I'm speaking about this. 13.24. There's break even 13.70, 23.75. So break even, but the euro is lower this morning. Crude oil is lower by, let's see, almost $2 this morning, about $1.50 here. It's like 11.66 right now. Was trading as high as 13.47 on Friday, so almost $2 there on that. The gold market, that's trading somewhat lower here this morning, 14.67. It's off its highs from Friday, which we were at 76, so that's almost a 10-point move lower also. So some of the commodities seeing some pushback this morning. So that's a good thing. And like I said, we'll keep an eye on these markets because we're still balanced. We're still balancing here. We're auctioning in a range. So this will eventually lead to some sort of an imbalanced state. You'll notice on this profile off to the right-hand side here, which is the monthly in development, note this number right here, 2750s. Okay, that's really your anchor point, if you will. If we can stay above that, we're going to continue to go higher because it's the midpoint of all of this. And it actually means that all of the volume for March is going off here at 2750. So are they selling 2750s or are they buying 2750s? Okay, I know we're only into this for... Actually, I have to change this profile because this is a 2-month composite. Here, let me do that real quick. Better. You can see for the month so far where all the volume's going up. I actually like the looks of that 2-month one because when we take the composite of both this month of March and April, it's still showing that the majority of the volume is going off at the 2750 area, so it's a little bit looking different profile at this point. But nonetheless, there's a lot of volume. This is, look at the profile for the month. I know we're day number 11 for the month, but there's an acceptance, if you will. This is an evenly distributed profile, almost perfect statistical bell curve here, if you will, where we tried to go higher and we tried to go lower, and the markets continue to auction within that range. So this is going to give us a nice imbalanced state for a really nice move. We do have a technical gap fill on the top side up here that I would make note on. That's the 3850s. Because remember, when this candle closed here, we actually opened here, so we still have a technical gap fill on the top side at 3850s in this market. So keep an eye out for that. Keep an eye out for this technical gap fill down here at 16. So those are our two main reference points that we have really in front of us here until we break outside of this. So we look to buy the lows, we look to sell the highs until this breaks out and something changes within this auctioning process. Otherwise, we have what we would call an acceptance of value up here where they're buying the lows and selling the highs. There's enough liquidity within this to meet the needs of both the buyers and the sellers. Equally match supply and demand, if you will. So that is the equity markets. And like I said, this week it's going to be interesting because we're getting some really nice pushback in some of the commodities this morning, so which might lead me to believe that we're going to want to get long these equity markets for new highs. We've been talking about that. I know it's hard to swallow sometimes and thinking about it, looking around what's going on in our country. But I think it's going to be the push higher, just kind of as a head fake, if you will, push it one more time higher, and then if we're going to see some sort of significant rollback, it will be then in this market. So I'm going to be looking to be a buyer this morning. Especially the way that I see oil and the euro and everything pushing back here this morning pre-market. I think we look for close to settlement here on Friday, and looks like they're already bouncing it out. We're up another $1.25 now from settlement. So see, they're defending the lows from Friday, which we had a high volume note at 23.75s in the S&P. So it may be worth getting long before we even get to the open here. All right, folks, have a great trading day. Just a couple things. Reminder that, if you like what you're seeing here, follow us on YouTube, also on Twitter. Be sure to visit our homepage at www.beyondprofile.com. We also have a spring special coming up on our Intro to Value-Based Trading, offering a $200 discount right now for that class, which we're going to be holding here in the next 2 weeks during the week, because we used to do it on the weekend, and we're going to try one during the week to meet people's needs, and this should work out really well. So thank you again. Have a great trading day.